Welcome back to Newsday. Thank you for staying with us. The New York Stock Exchange is just opening for cash trading. But first, let's take a peep at other major stock markets to see how they are moving. European stock markets were slightly higher as Eurozone consumer price rises cooled and markets awaited a just-released U.S. inflation print. Markets in the Asia Pacific were also higher as technology stocks continue to recover on Wall Street and traders shake off concerns of a further banking crisis in the U.S. The focus is on the Federal Reserve's preferred measure of inflation, the Core Personal Consumption Expenditure Index, which has just been released. In the data just out, we saw the key Fed inflation gauge up 0.3% in February, which was less than expected. The Personal Consumption Expenditures Price Index, excluding food and energy, were expected to rise 0.4% in February.
Our Rise Business Analyst Bode Ososami is here to take us through the markets as the New York Stock Exchange opens for cash trading. Bode, thanks for joining us on Newsday. Now, to what extent is the U.S. inflation print just out affecting sentiment, especially in the New York Stock Exchange, and what is moving markets?
Well, indeed, the print that just came out was better than expected in terms of the reduction in the growth in inflation, which of course is good news for markets. But to what's moving markets, I think there are two broad issues. Let me talk first on Trump before I talk on inflation. The indictment might not seem like much of an issue, but of course, it comes at a time when a compromise on the debt ceiling is needed with just too many differences on how the government money should be spent. And the indictment will make the middle ground harder to find on policy issues. So we'll wait and see how this develops. Markets have not been paying a lot of attention to the politics, but they may be forced to if we do get a downgrade, for example, in risk as a result of uncertainty around the passing of all the legislation around the debt ceiling. But the personal consumption index, just like I said, certainly helped stock futures inch up, and I think it's also helping stocks. NASDAQ, as we speak, is up 0.27%. Dow 30 is also up 0.47%. S&P 500 is up 0.33%. And there's also optimism, especially looking at the situation with the banks. We'll also talk about that later. But on PCE, just like you said, it grew at a lower 5% on a yearly basis in February from 5.3%, lower than expectation of 5.3%. But the annual core index was moved to a lower 4.6% in February from 4.7%. And on a monthly basis, core PC inflation, that's the gauge that the Fed watches. Of course, month on month is more relevant in terms of the impact of what they're doing. It went up 0.3%, less than 0.4% that was expected, and last month 0.5%. Also, in terms of details that we got from the data, personal consumption expenditure increases in housing and healthcare were partly offset by decrease in food services and accommodations. And within goods, increases in gasoline and other goods were offset by a decrease in motor vehicles and parts. But data that also came out, personal income rose by 0.3% on a monthly basis, higher than 0.2%, although you normally expect that because of increase in wages around this season. But personal spending increased by 0.2%, lower than 2% last month, and 0.3% expected. So we have inflation growth slowing, but the economy, the consumer appetite looks still going lower. And just like I said, the banking crisis, based on some of the data that came out yesterday, shows that borrowing through two emergency Fed lending programs decreased slightly last week. And that means there's really no evidence of any frantic liquidity dash from jittery banks that may feel they are undercapitalized. But still on markets, all this means or suggests that the Fed's job may be nearer its end. Still too early to say let's wait for the non-farm payrolls in April 7 and the March Consumer Price Index also coming out in April, this time on the 12th. The next FOMC meeting is going to hold in May. But as I speak, we continue to see the indices still inching up. NASDAQ still up 0.39%. Dow 30 is also green, 0.48%. S&P 500 is also up 0.44%. Looking at some of the banks which we've been tracking, we can see FCNCA, that's First Citizen, is up 0.4%. JP Morgan is up 0.79%. If the index for regional banks is up 0.92%, banks like First Republic, which is another regional bank, however, is down 0.99%. So let's just say that things are calming slowly in that regional banking sector. But I think the focus now is going to be what happens, especially in terms of that debt ceiling, if the politics gets even more divided. And of course, the data we're going to get in April on inflation and non-farm payrolls.
Well, thank you for that, Bode. Just hang on with us for a little more as we take some more business stories and get back to you. Eurozone inflation dropped by the most on record in March, according to data on Friday. Core price pressures, which include food and energy, accelerated, which keeps the heat on the European Central Bank to keep raising rates. The month-on-month core inflation index, that is less food and energy, arrived at 1.2% last month, double the 0.6% expected and 0.8% seen in February.
The final revision for gross domestic product (GDP) in the United Kingdom showed the economy expanded 0.60% in the fourth quarter of 2022 over the same quarter of the previous year. The UK economy is now expected to narrowly miss a technical recession, even though growth remains sluggish.
United States President Joe Biden has urged federal regulators to take up a set of reforms to safeguard the banking system following the collapse of Silicon Valley Bank and Signature Bank. The White House said in a fact sheet Thursday that Biden's proposals fit into his recent effort to strengthen oversight and regulation of larger banks so that we're not in this position again. The administration wants regulators to take a range of steps to reinstate safeguards for banks with assets between $100 billion and $250 billion and bolster supervision over financial institutions.
Japan's trade ministry will impose export controls on equipment used in chip manufacturing. While it did not mention China as a target of these measures, the move falls in line with the U.S. push in October to restrict China's ability to produce high-tech chips as concerns rise that Beijing plans to use the material for military purposes. Separately, the Netherlands is pressing ahead with export restrictions on advanced semiconductor manufacturing equipment.
China's manufacturing activity slowed in March, official figures showed today, while growth in the services and construction sectors surged to a 12-year high. The world's second-largest economy is slowly rebounding after posting some of its weakest growth in decades in 2022. The official Manufacturing Purchasing Managers Index, a key gauge of Chinese factory output, beat expectations but fell to 51.9 in March from 52.6 in February, data from the National Bureau of Statistics showed.
The UK has unveiled an agreement to join an 11-member Asia-Pacific trade bloc with British Prime Minister Rishi Sunak claiming it proved his government was seizing post-Brexit freedoms. Talks on Britain becoming a member of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership were finally wrapped up after 2 years of haggling over quotas and tariffs. The UK will be the first to join the Trans-Pacific Partnership since the group was established in 2018.
Low-paid workers will get a pay increase set to match inflation as the UK's minimum wage increases to £10.42 per hour from April, the Low Pay Commission said today. The 92p raise is the main rate of the national living wage, represents a 9.7% 4% increase in 2022 and means 2 million workers will now be paid at or close to the statutory earnings floor, according to the LPC, which advises the government on policy.
An AI policy think tank wants the U.S. government to investigate OpenAI and its widely popular GPT artificial intelligence product, claiming that algorithmic bias, privacy concerns, and the technology's tendency to produce sometimes inaccurate results may violate federal consumer protection law. The Center for AI and Digital Policy said on Thursday that it had asked the Federal Trade Commission to prohibit OpenAI from releasing future versions of GPT and establish new regulations for the rapidly growing AI sector. Arise business analyst Bode Ososami is back with us from London. Bode, what is Biden proposing to safeguard the banking system in this fact sheet just released?
Understandably, he's trying to see what can be done with the existing rules rather than attempting any major new regulation. And of course, the environment just got a little bit more toxic. Republicans are traditionally more skeptical of more regulation. And of course, they control the House. The Trump era deregulation bill that was passed in 2018 limited the ability of regulators to impose stricter rules on small banks and gave agencies broader discretion in tailoring bank capital requirements for mid-sized banks like SVB. And what the Republicans are saying that the failures are really the responsibility of the regulators, and the regulators should be held accountable since they have the tools, and they actually said they knew that these things that went amiss were happening. So why did they not take action? And having more rules, in the view of the Republicans, is not going to solve the problem. Rather, they should make sure that the regulators, as the Fed, are held accountable for this. Of course, the White House have a different view altogether. What Biden is proposing is increasing things like the frequency of stress tests for mid-sized banks, raising liquidity requirements for mid-sized banks. In this White House paper, they also talk about updating liquidity stress tests to reflect the high speed of digital withdrawals and what's the impact of social media to spread information and misinformation among depositors at a very fast pace, which of course would increase the pace of withdrawals. And then the need for mid-sized banks to submit plans explaining how they could close down in the event that they fail without further stress to the broader financial system, and so on. Or things like the impact of rapid rate hikes and stress tests that reflect the bank's vulnerability to these sorts of things should also be included. My point here is, although there is no evidence that these additional tests would have averted the crisis, I think because the Fed really knew there was a problem, the real issue is, could they take action and why did they not? According to the Republican chair of the House Financial Services Committee, he says Biden is politicizing the bank's failures and is questioning if these proposed fixes would have prevented the crisis. But apart from that, Democrats are going ahead with a menu of new legislation to penalize bank executives and also claw back things like compensation, bonuses, and so on. Elizabeth Warren is pushing legislation. Maxine Waters also pushing another similar legislation. But I don't see any major radical change, at least through the legislation going through, especially in the very divided situation that we have. And I think it will take more than the recent SVB collapse to see any major adjustments to regulatory, the level of regulations. But we will see for sure the Fed being much more vigilant in monitoring compliance.
And Bode, the UK is tilting to the Asia-Pacific as it seeks post-Brexit opportunities. How impactful is this deal?
Well, the pivot to Asia definitely makes sense. Europe is struggling to grow. The few regions in the world, Asia, Africa to some extent, Latin America, where we're seeing little growth. And I think the UK have decided that they really need to go beyond, well, they were forced to, given the Brexit, beyond their comfort zone. Trade Secretary Kemi Badenoch has said the UK joining this bloc is about the potential for growth, and she was responding to those who are downplaying this achievement, as she downplayed some of the estimates suggesting the deal would boost the UK economy by just 0.08%. She said it has far more implications in terms of future potential than what people are saying. The CPTPP is the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, has about 11 or so Asia-Pacific countries. Most of these countries already have trade deals with the UK, apart from Malaysia and Brunei. And tariff-free trade certainly can unlock economic opportunities for industrial growth as the economy demand, as the export demand picks up, especially with this fast-growing Asian economies. Rishi Sunak is very excited about the deal. He says there are real economic benefits of post-Brexit freedoms, and it's an opportunity for the UK to seize the new opportunities for new jobs, growth, and innovation. Preferential tariffs will only apply where exporters can demonstrate the products have a sufficient proportion of locally sourced parts. The deal includes an agreement on quota on beef imports. Tariffs on palm oil from Malaysia will be liberalized. I understand 99% of UK exports to CPTPP would be eligible for these tariffs, including for cheese, flowers, chocolate, machinery, gin, and whiskey. But according to the World Bank's recent report, one of the ways to really improve global economic growth, speed limit, that's get higher growth that will not be inflationary, is to address cost of trade. And this is an example of one way to bring down cost and boost global growth. And of course, CPTPP could expand, maybe not China in the near term. And the US, of course, are focusing more on the domestic scene. There are many other Asian Pacific countries like Indonesia, Ecuador, Uruguay, Thailand that want to get in.
Well, but it seems the artificial intelligence space is facing a deluge of complaints to regulators, and concerns are multiplying. How is the Federal Trade Commission likely to respond to the latest complaints?
Well, my thinking is that the interest in AI from a regulatory perspective is a very healthy development. And I also agree that disclaimers do not absolve the AI from liability, and the earlier we get firmer rules in place, the better. We also got a call to pause further development. This is not a reversal, it's just an admission that AI is too impactful on our daily lives to be allowed to blossom in a free-for-all mode. The complaint specifically being pushed now is that AI is believing that they can use disclaimers about limitations of artificial intelligence to get away with not really doing what they need to do. But as you know, the consequence of a terrorist attack that was abetted or helped by some AI information or acting on incorrect information cannot be compared to what you get if you ignore a disclaimer on a packet of cigarettes. So although AI is saying, yes, the information can be wrong, they're admitting that there are outright possibilities of seeing issues, but and asking people to be careful. Many are saying that they should actually treat these errors, or what some are calling AI has hallucinations, where we get these huge errors, treat them as violations, as very important violations. We'll see how the FTC respond. I tend to agree disclosures can just not be enough. And admitting that you could have broad-based discrimination against minorities is just not enough to absolve you of liability and accountability. So we'll see what the FTC does. I hope they will take these complaints seriously. And when big AI players like Musk, who've used AI extensively on, for example, Tesla's autopilot systems, are also calling for restraint, we definitely should give some attention to that.
Well, Bode, thank you so much for that this afternoon and for joining us on Newsday.